All right, Caesar with Chatham Mortgage Partners, talking to you guys today about why today's options will save homeowners from foreclosure. So there's a lot of things that have happened. Obviously, there's been a lot of talk about the options that homeowners have if they're not able to make their payments if they lost their job. So many housing experts originally voiced concern that the mortgage forbearance program, which allows families impacted financially by COVID to delay mortgage payments to a later date, could lead to an increase in foreclosures when forbearance is in. Some originally forecasted that up to 30% of homeowners would choose to enter forbearances. Less than 10% actually did, and that percentage has been dropping steadily. Black Knight recently reported that national forbearance rate has decreased to 5.6%, falling below 3 million for the first time since mid-April. Many of those still in forbearance are actually making timely payments. Maloney of Bloomberg Wealth recently explained almost 1/4 of all homeowners who have demanded forbearance are still current on their mortgages, according to the latest MBA data. However, over 2 million homeowners are still in forbearance. Some experts are concerned that this might lead to another wave of foreclosures like the one we saw a little bit over a decade ago during the Great Recession. Here's why this time it's different. So technically, there will be fewer strategic defaults today due to the vast majority of homeowners have significant equity in their home, drastically decreases the possibility of default. So let's look at the 4 to 5 options that are still available for people that are not able to make their payments or that are, in some type of hardship. So we have the most important factor here is equity. So most homeowners right now have a ton of equity. They're equity rich, so they're able to take advantage of today's historic low rates. That's option number 1. To refinance. So if you're in a situation where you're able to take advantage of today's refinance opportunity, this would be the ideal situation for you. Lower your payment, save any, depending on the size and the situation that you have, or on your mortgage, you might be able to save a sizable amount, shave off a sizable amount of mortgage off your payment, your monthly payment. The second option is forbearance. Forbearance is, since the beginning, I talked about forbearance is not forgiveness. And we've been seeing it lately. More and more people are actually, the ones that took the forbearance probably didn't get it approved either on other options. So now they're probably in situations where the balance is due. It becomes a balloon payment. They want all the payments due, whether it's the 4th, whether it's the 8th, whether it's the 12th, whatever you got approved on. Option number 3 is deferment. A lot of people took advantage and got approved on a deferment, meaning that the payments that they missed were able to be added to the back of the loan. But when you look at their mortgage statement, you could actually see the full balance there. And when you look at their credit report, you also see deferment. That stops a lot of people from, that want to go back to step number 1, which is refinance. They're not able to refinance. On a conforming side, if you've taken advantage of the deferment, you're able to do it after 3 consistent payments from the deferment approval. On a jumbo and high balance side, you're pretty much in the worst situation of all because, lenders are feeling that that's too risky. And now their guidelines are pretty much saying from the point of deferment, you got to make at least 24 consistent payments. And that's really putting a lot of people in bad situations. The next option there would be to go back, see if you can pay off that balance and go back to your standard loan, get that removed, and see if there's a possibility to refinance at that. And last but not least, modification. A lot of people are still taking modifications. Seems like modifications never left since 2007, 2008 recession. So those are back in place, still around. Anybody that takes advantage of modifications, you better be sure to read the agreement because it could put you in a situation like many others in the past that try to refinance or that sold years later. They actually had to pay off that balance. It became a due on sale clause. They had to pay it off. They didn't net what they thought they're gonna net, and therefore they weren't happy. So if you guys have any questions, please feel free to reach out to us, share, comment, like, let us know what you guys think about this. This is some information that, like I said, there's been a lot of talk about this. Thank you so much.